Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for the week ending Friday, February 8th, 2019. We'll go over what happened today and what we're looking for next week. A little bit of recovery in the markets. We opened down today and had an intraday recovery. Really wasn't much of a surprise. Nothing falls forever. And let me tell you what I'm talking about here as far as much of a surprise. This was posted. I posted this in the trading room well before the market opened today, stating that we had some small divergences on the 60-minute. Here we go down here. Small divergences on the 60-minute charts of ES and NQ that could play out for a relatively small bounce before and or shortly after the open today, but nothing to be overly concerned with for swing traders who are short the index ETFs, as the charts still indicate more downside likely to come, minor zigs and zags aside. So what I mean by that, well, let's look at these charts first. This one was taken screenshot was taken well before the market opened at about 8:14 a.m. Eastern time, and so those are the small divergences. So this can be confusing to some. And I actually, not to go off on a tangent, but on an unrelated post in the trading room, I made this comment to somebody that, they were asking about, does this look bullish or this look bearish? And I got into a discussion about time frames. As an active trader, in my trading account, you can, I will often, and I'll point out these short-term bullish developments if something's longer-term bearish. In other words, nothing's changed for my outlook for the NQ. This is the bigger picture right here. This is what I was referring to by swing trader time frame. This is why I didn't post these on the front page for silver members that are swing trading. We have some, index shorts right now, things like that, because this is the bigger picture and nothing goes down forever. We've only had one wave down. You can see since a breakdown, we had a little breakdown and back test. I covered that yesterday. And so today we had a kickback rally and relatively minor, especially compared to the initial leg down. So remember, this is what I talk about, zigs and zags. The market doesn't do this. If it's going to go to this point here, it's going to go in some fashion like this. So again, separate or define your time frame. And I went on to say later on, right after this, in a follow-up post with update on these charts, that if these divergences continue to play out, my max expectation for the upside, where I expect the bounce to end, would be capped at 2710 on the S&P 500 futures. That's what we're looking at here. This is ES. Oops, messed that up. It's a 60-minute chart of ES we're looking at here. So 2710, and then the next chart I posted along with that at the same time, also 8:14 this morning, was the 60-minute chart of NQ, the NASDAQ 100 E-minis, and pointed out the divergence. You can see it right there. So there's your positive divergence. And I went on to say after in a follow-up post, 69.28 would be my max upside bounce target, where I think that these small divergences would play out. So again, there's your bigger picture. This tells you the swing trade, the near-term outlook in the coming days to possibly weeks, whereas this is a very short-term, very small divergent low that came on the heels of on the first leg down after the breakout there, and as such, it's good for maybe a few hours, possibly a day or so, and that's what I'm talking about, different time frames. So let's fast forward to where we're at. Again, those numbers were 69.28 on NQ and 27.10.35 on ES. What am I saying? 27.10, yeah, 27.10.35. And here's the ES chart. Now there is no 27.10.35 on ES. Trades in quarter point increments. It's just when I move the trend lines as interactive brokers, their charts, it doesn't snap to the nearest quarter point. But you can see. Let's zoom in. Let's take this in a little tighter. There's those divergences this morning, and that's it. About close enough for government work now. It can be proven wrong if we pop on through there, but I still think that would contain a bounce. It looks plenty to satisfy this small divergence. And again, this appears to be, just a kickback rally in what should be at least an ABC correction, and more likely some more to come. And again, that was a pretty decent level before. So 27.10 has now been hit, and that was again my max upside bounce target. Let's look at NQ. Okay, and this is the updated NQ chart. It's streaming live. And you can see there's that 69.28. Again, it says 69.27.96. Again, there is no 69.27.96 print on NQ. It only printed 69.28 or 69.27.75. So effectively, that one's been hit too. So we'll see. To be continued next week. I mean, there's the futures will pick up trading Sunday night, and so that's if something changes, then I'll update my thoughts. But as of now, it looks like just a little kickback rally, which was technically driven by the very, very near-term overbought conditions and the divergences, again, that had set up in the overnight session. We didn't have those last night when I did the market wrap, so that's why I pointed those out this morning. And there's that support that it hit as well. That was also a target that was laid out in advance. Okay, so really not much more to cover. Again, we had a small kickback rally. The market's closed slightly positive. We'll call it flat. What are we looking at here? 0.20% up on QQQ and 0.12% positive on SPY. At least on one monitor, I'm showing 0.15 here. Whatever. We'll call it virtually flat. That yellow line is. So that's what it was, a little recovery. But again, when I look at this chart, here's a 60-minute chart of SPY. There's a breakdown, and we're not even back testing yet. QQQ back tested today. It's a trend indicator. We'll watch that because this is where it would be ideal, and this market doesn't make anything easy for anybody, but it would be ideal to see us turn down next week. Why? Well, that would prevent or foil this potential bullish cross. You can see the PPO turning up, and that signal line, like I say, I like to use that as a trend indicator. I want to see that signal line cross solidly down below the white dotted line there. It's below it now, but not close enough. And we really zoom in tight, and you can see again a potential bullish cross. So a rejection there would help the bearish case. It would also be a rejection at that resistance level I just showed you on ES. Whereas if we pop to next week and can hold those gains, we're going to have a bullish cross. We'll have the PPO signal line, the potential that it crosses back above the zero line and gives us a whipsaw false signal there. In that case, SPY might want to make a run at a back test. So it's not my preferred scenario. If it happens, look, I can tell you this right now, it's not going to change anything on the technicals. You'll still very much have the divergence lines extended. In fact, they'll be even steeper, more steep, I should say. Here you can see they're really dropping off now. So a little kickback rally on Monday could certainly still keep the near-term bearish outlook in play. But although it's not my preferred scenario, I really want to see, like I talked about, everyone moving to one side of the boat. I want to see them start to shift over to the short side, or longs taking profits, shorts coming in, and continue this down next week. So we'll pick it up on Monday, follow up QQQ, a lot of lines on this chart. Let me just get rid of this one or darken it up. That's one line we may come in and back test soon. Put that a different color there, get that out of the way. So this really triggered when we zoom in. We had this small wedge here, which was broken. That was our, give us a near-term sell signal, divergent high, all the good stuff I like to see. Came down, hit this trend line, danced a little on it, took it out and back tested. So we're basically on that trend line now in QQQ. We also hit that support level. I believe that was highlighted yesterday, that 166.24. And next stop, probably somewhere down here around 161 or so. Same story with QQQ as just pointed out on SPY. We have the PPO signal line crossing down below, but sometimes you have, the zero line usually acts as support or resistance when tested from above or below. But just like with prices on support or resistance levels up above, you can have these slight whipsaws. Sometimes those do occur. So let's watch that. We're seeing again PPO's poised to make a bullish cross, but it hasn't done so yet. And so we'll just have to see what happens when trading resumes, and go from there. Here's a case, just so you know, sometimes it'll look like you're going to have bullish crossovers on a moving average pair or something like the PPO or the MACD, like we had back here. You can see we had crossed down below, gave a sell signal on that 9 EMA, the PPO signal line. PPO was coming up quick. We had a nice kickback rally right here that did that, and then boom, rejection, and it went back down. And it made a crossover later on, but what happened is that trend indicator remained below the zero line, so you really didn't have a buy signal until it broke above here and then made a successful back test and has been bullish since until just recently. So that's it. And again, it's more of the bigger picture. Those are just some things that help to play into my analysis. But the bigger picture is this long extended uptrend, some other things on the daily chart, some other indicators and things like that. And I guess that's it, guys. All right, we'll pick it up on Monday and see if anything changes. Otherwise, as of now, status quo from my last update. Have a great weekend, and we'll see you on Monday.